Okay, so this was one trade that I really loved. This trade played out perfectly. So I think the setups I sent out this week, I went 2 for 3. And once again, the thing that I always encourage people to understand is risk to reward, right? So we basically had a 4-to-1 R to R. And the reason that's important is because if you keep your risk the same, as in lot size, then if your risk to reward is at least 2-to-1 or higher, you can literally lose more trades than you win and still be profitable. And so like when you know that your strategy is going to give you higher than a 50% win rate, then that just is icing on the cake. It's like, so now not only when I win is it sometimes 3 or 4 or 5 times greater, but now when I win, like let's say I had 5% risk on this trade. So 30 pips, a 5% loss, and whereas a 4 reward ratio, that would give me a 20% reward on one trade, right? Same thing. Next trade, 5%, 20% gain. And that's how people would see me double an account in a month, still using moderately good risk. It's just based off these setups. So what brought me to this setup is this. We've been in this overall downtrend, but once again, when you start to see areas where just price is getting tired, right? And what do I mean by tired? Not only exhaustion, but seeing bearish and then followed by bullish, right? And so over here, we saw the same thing, but the candle that really excited me on wanting to get in was this H1 candle. I'll show you guys on the M30 because that's actually where I entered. So I got in on this M30 close only because, once again, when we look left, anytime we get these like induction moves or liquidity grabs, you can call them really whatever you want, but it's just basically, I used to view these thinking like, oh, okay, cool, we just got this big bearish candle, let me sell at a low. Big mistake I used to make. Whereas now I just become more patient in saying, okay, I get that we're in a downtrend, but if I can at least catch a counter trend buy to like around I think I was aiming for the 38.2 area. Let me see here real quick. Yep. This is the 38.2 area. I'm like, okay, at this point, I'll go back to the H1 real quick. At this point, if I can get a retracement buy to the 38.2 area, that's a great trade. That's 4-to-1. I'm happy with that. I don't want to be trying to swing a big long-term trade and the counter trend move. So, it played out perfectly. Like I said, we got in on that M30 bullish engulfing. It was right after liquidity grab down here around these lows, and we just caught a nice move. And once again, in maintaining the order, we keep it very simple. We keep it very, very simple. We get in. Once we break these highs over here, these previous highs, I'll just mark it with a random line. Once we break those highs, we can just literally use our Fibonacci tool on the M30 and just maintain our order. So from here, we see we get this high right here, this wick. Okay, I'll make sure you guys can see this. We get this high, price wicks down to the 38.2, but ultimately the candle closes on 23.6. We always like to look for candle closure. A wick only means so much. We can't allow these wicks to get too noisy. What happens, that 23.6 represents a continuation area. Same thing, you guys can see. Once we got this candle right here above all three moving averages, then I'm really excited. At this point, if you want, you could add a couple more orders, mitigate your risk. Don't use the same type of entry that you did on your initial lot size. But if you want to be scaling in on these 23.6s, you can. You have that option. Just keep in mind when you scale in, your stop loss will most likely be like around the 50% or the 61.8. So, they're gonna have to be a bit tighter. With that being said, we can see from there we just continue to create new highs, and it was just one of those trades where it just went immediately to the TP. And seeing this once again, like all this retracement, that let me know, okay, cool. I'm like, because some people will say, but yeah, bro, like, look, you left another 70 pips on the table. And it's like, if you always have that mindset, no matter what trade you take, you're always going to be either feeling like you missed out or you could have got more. It's just an unhealthy place to live. So that's where I like to focus on. We got into the trade with the expectation 4-1. We knew the most we were going to lose is 30 pips, period. Once our trade goes into profit, once it broke this high, we can roll our stops if we want. And that's, once again, rolling stops is entirely up to you guys. There's no right or wrong method, but at that point, once we get about 30, 40 pips in profit, now you have no risk on the table. And it's just a great, great setup. So I'm going to show you guys the GJ setups. Okay, cool. So GJ, last week called this out as well. So I think it was very similar. But here's the one difference. I'll show you guys on H4. GJ, we're still overall bullish. So you guys can see these cycles, right? We had a big bullish cycle. That's our point A to point B, right? Our point A is down here. Our point B is up here. We had a 61.8 retracement. So you guys know with the GBP pairs, we're always expecting anywhere from like a 50 to 61.8 as like an opportune kill zone. Now, what happened early was I got in on this candle, around this candle here. Once again, little to no drawdown. I think it was this candle here that supported off this area, and the whole concept of, we were expecting at least a push, maybe potentially back up to this area. In regards to like why that TP is so high is just because, once again, like on the higher time frames, we're still expecting the projection. We're still expecting a higher high to be made. So that still is an option. But just as far as the original entry that we got, we went 183 pips into profit. That's why I have this labeled here. I sent that out to the group and basically let them know, like, at that point, people can still maintain on the M30. This is where you guys could be evaluating and maintaining yourself on whether you want to close or not. Once again, how would we do that? So even if you go from where you get in the trade off this candle, so there's like multiple times that you could have exited the trade here on this 38.2 if you wanted. If you decided to maintain and say, you know what, once you got this much into profit, if you wanted to roll your stops, you could do that. You always have the option, right? The biggest thing is you don't want to make 183 pip winner a loser. So once this trade had came back down, it stopped me at break even. And it's one thing to get stopped at break even if you're only like 10 pips in profit or 20 pips in profit. Like, you want to give your positions enough room to still breathe. Okay. Now this candle here, as it was forming, I think I want to say I got in on the M15. I sent out the H1 chart, but I put an arrow here based off the candle that we had got in on. And once again, an induction, right? Like, you see bearish, bearish, bullish, bullish, all the way back above this massive bearish candle, and then bullish back above this support. And that was the biggest thing, is like, I told the group, if price closes back above this support right here, then we're taking this, we're buying this, because once again, liquidity grab. Where's our higher low? Here. Where are we at on the higher time frame? 61.8. So I understood that these wicks to the downside were trying to knock out all the buyers. They were trying to go grab all those buy orders and stop them out. And then when people started selling, what did they do? They pushed price back up, and they got all those people sell orders, and ultimately price played out. Now here's what's cool. Is this trade played out to the T once again. So we had our first trade go 183 pips into profit and then get stopped out at break even. And this trade was a 6.6 to 1 risk to reward. Okay. So we were risking 62 pips to catch 416. And once again, to the T, we get in, not much drawdown at all. Literally, I want to say maybe 2 pips drawdown. And that's the one thing too that like is cool, is once you start to get confident enough about, okay, this is a good opportunity for us to get in, then you get in, especially if it's in momentum. You wait till the right time. I think I had a line segment there, which was like right around the start of New York session. I want to say, I see it says 8 there, but so it's most likely like 9 a.m. Eastern. And so just the concept, we got in the trade. We see that once again, once I get this 1, 2, 3, and especially this candle right here closing above all 3 moving averages, like that's where it's like perfect. Let's really let it ride at that point. And so once you get far enough in profit, you can roll that's 170 pips. You can roll your stop to break even. So two for three on the week, once again, collectively, that's like around, let's see, you had 120 plus 416. That's 36. Yeah, 536 pips, not including the 183 that we caught over here. I don't count that because technically it got broke. It was at break even. So yeah, I mean 500 pips, two for three. Just the concept. That's how I want you guys viewing your trading. So less than a minute. I'll make sure I drop the recording in the manifest chat, in the free game chat, in the Arrow chat. I appreciate you guys for tapping in. Seriously, it means a lot. It's a privilege. It's an honor and a blessing for myself and Vlad to get to educate and just share some game with you guys week to week to week. So let's have a great week trading. Seriously, this could be the week that changes your life. I don't see why not. And I'm excited for every single person on this call. More receipts, more and more receipts that we're putting in.